Hey Suffield, housing is showing signs of normalization, and that is good news for our home sellers out there. Want to learn more? Take a listen to July's Suffield housing market update. As we head into the second half of the year, we're taking stock on how the market has fared so far, and all signs are pointing to normalcy returning to the housing market. But first, let's take a look at how the numbers are looking in Suffield. For Suffield, in June, 13 homes sold, and that's down 54% from June of 2022. 10 new listings came on the market, and that's down 23%. The sales price to list price ratio is 100.97%, and that's down 3%. And the average sale price per square foot is $222, and that's up 11%. The average sale price in Suffield was $526,000, and that's up 20% from 2022. And the average days on market is 27, and that's actually up 93% from 2022. As far as inventory is concerned, the month supply of inventory is 2.15 months, and that's up 107% from June of 2022. Now, how that works is 6 months is considered a balanced market. So anything more than 6 months is a buyer's market, and anything less than 6 months is a seller's market. So at 2.15 months inventory, we are still very much in a seller's market. Okay, so here's some top line great news we're seeing out in the market. Number one, housing is normalizing after we're seeing an unprecedented 2 unicorn years out there in the market. We're seeing that normalization show up in demand, and we're seeing that normalization show up in prices. And we're seeing that showing up in the return of seasonality, where the trends get really busy and build up in the spring into the summer, and then they start to quiet down as we head into late fall and into winter. Buyers are now adjusting to the new normal of higher interest rates, and that is showing up in stronger buyer demand. In fact, Freddie Mac conducted a survey of buyers and sellers, and what they found, and this was done in May of this year, is that 18% of Americans said they were likely to buy a home in the next 6 months. So that number is really significant in a given year, and I'm talking pre-2020 here, because the normal share of buyers entering the marketplace was around 8 to 10%. That is a clear indication for a lot of Americans today that the desire to buy a home is clearly on the front burner. At the same time, 16% of Americans who own their home, who are surveyed in May, said they are likely to sell in the next 6 months. These are really solid indicators of a market that is really returning to a more typical seasonal trend, but also importantly, returning towards a more active market. And although we've seen inventory kick up a bit, both nationally and in Suffield, supply still remains incredibly low, and demand continues to outpace supply, which is keeping consistent upward pressure on home prices. The chief economist at NAR points out that while available inventory strongly impacts home sales, existing home sales activity is down sizably due to the current supply being roughly half the level of 2019. And when we take a look at the numbers, we can quickly see at a glance what Lawrence means here. When you look at the average month supply for the 2011 to 2019 period, you see it's roughly about 5 months. That's the inventory you'd be expecting in a balanced market. Today, and this is as of May of 2023, we are at a 3-month supply nationally, an improvement indeed from the unicorn years we've seen since 2020, supporting a move toward normalization. But at the same time, we are still quite a bit short of where we were in a balanced market. And for Suffield, we're seeing even lower inventory levels than the national average, with Suffield being at 2.15 months inventory. With the tension in the marketplace, there's a big focus now more than ever on affordability. But with mortgage rates stabilizing and even predicted to fall as we come into the end of the year, that could help ease some concern for home buyers. Doug Duncan, Senior VP and Chief Economist from Fannie Mae, offered this outlook. Housing prices continue to show stronger growth than what was previously expected. Housing performance is a testimony to the strength of demographic-related demand in the face of baby boomers aging in place and Gen Xers locking in historically low rates, both of which have helped keep housing supply at historically low levels. Homebuilders continue to add to that supply, but years of meager home building over the past business cycle means the imbalance will likely continue for some time. We do expect housing will be supportive of the overall economy. So what does this mean for you as a homeowner? Well, with inventory still historically low, we have more buyers than we have houses to sell them, so it is still very much a seller's market. And with continued upward pressure on home prices, you still remain in an incredible equity position, and it could be time to use that equity to fuel your next move. and options do exist if you need to sell in order to buy in this current market, and I'm here to help. Curious what the equity looks like in your home? Click that link below to get a free home valuation on your property. Thanks for your likes, shares, and comments, and if you found this information useful, click that subscribe button below. All right, this is your July Suffield housing market update. See you next month.